Something major is happening right now, and most people won't understand it until it's too late. It's not happening in Congress, not in the White House, not even on cable news. It's happening quietly in the most brutally honest place on earth, the market. And today, the market is sending a signal so loud it's almost impossible to ignore. Gold just hit a fresh record over $4,600 per ounce. That's right. 1 ounce, the size of a small coin, is now worth more than many Americans earn in a month. And silver? Silver has surged past $84 an ounce, also a record. To the average person, this looks like just another headline, something for Wall Street traders and finance nerds. But if you know what you're looking at, this is not just a commodities story. This is a global confidence story. Because gold and silver don't move like this for no reason. These metals don't spike because of hype or TikTok trends. They spike when something deeper breaks. Trust, stability, predictability. When people stop believing the system is safe, money runs for shelter. And the oldest shelters in human history are gold and silver. So the question isn't just why did gold go up? The real question is, what does the world know that it's not saying out loud? Right now, 3 powerful forces are hitting at the same time, and the collision is driving investors into panic protection mode. Today, let's delve into why gold and silver are exploding to record highs, and what it reveals about the world's rising fear. Don't forget to hit the like button and subscribe, as it's the best way to support this channel. If Iran is the fire in the distance, the Fed situation is the smoke in your house, because it's not over there, it's here, and it hits Americans directly. Mortgages, credit cards, jobs, inflation, retirement accounts, everything. The U.S. Federal Reserve is supposed to be independent. That independence is a pillar of modern American economic stability. Whether people like Jerome Powell or hate him doesn't matter. The point is, the Fed's job is not to serve a president. It's to serve the long-term health of the economy, based on data, not politics. And that's why Powell's statement today landed like a bombshell. He basically said the central bank is facing political pressure and that the Trump administration has threatened a criminal probe, implying retaliation for not following political preferences. That kind of message isn't just dramatic. It sends markets into paranoia because investors ask a terrifying question. If the Fed is no longer independent, what happens to the dollar? If monetary policy becomes political, interest rates set like campaign promises, then the US dollar stops being seen as the most stable currency in the world. And when that perception cracks, the ripple effects are enormous. Even if the dollar doesn't collapse tomorrow, confidence can fall quickly. And when confidence drops, the safest move is to shift into assets that sit outside government influence, gold and silver. Because gold cannot be subpoenaed. Gold cannot be pressured. Gold doesn't care about elections. That's why the biggest gold rallies often happen when institutions look fragile. Gold isn't betting on collapse. Gold is betting on uncertainty. And the Fed being politically compromised is pure uncertainty. There's a third force pushing this move, and it's less dramatic than Iran or the Fed drama. But it might be even more important long-term. The U.S. economy is slowing, job growth has cooled, some of the hot momentum that kept markets confident is fading, and now traders are shifting their expectations. They believe the Fed will cut rates, likely at least twice this year. That expectation. I'll say it in plain English. Lower interest rates are rocket fuel for gold. Here's why. Gold and silver don't pay interest. They don't produce cash flow. So when interest rates are high, investors are more attracted to assets that do pay, like bonds, money markets, or high-yield accounts. But when interest rates fall, holding gold becomes more attractive because the opportunity cost disappears. If you can earn 5% in cash, gold is less exciting. But if cash yields shrink and rate cuts begin, then gold becomes the hard money alternative again. That's why gold often rallies before rate cuts. It's not reacting to the present, it's pricing the next chapter. Put those 3 factors together. Geopolitical risk in Iran Fed independence being questioned, U.S. economic slowdown, rate cuts expected. And you get exactly what we're seeing now, a historic rush into hard assets. This isn't a one-day story. This is the market saying we see turbulence ahead. Gold doesn't just track price, it tracks emotion. Gold is basically a real-time chart of global anxiety, not because it predicts war, but because it measures fear. Gold spikes when institutions look weak, currencies feel unstable, wars expand governments, overspend inflation, returns, markets lose faith. So when gold hits a record, it's not just a win for gold holders, it's a warning sign, a flashing red light. The world is not feeling safe. And it isn't just history. This pattern is played out repeatedly. Let's look at the historical blueprint. The 1970s, oil shocks, plus Cold War. In the 1970s, the world got hit with oil shocks and Cold War tension. The 1973 oil embargo rattled the global economy. Gold surged. Then the 1979 Iranian Revolution happened. a major destabilizing event in a key oil region. Gold surged again. The message was clear. When the Middle East explodes, money runs for shelter. The 1980s, Afghanistan upultas, global instability. In the early 1980s, after the Soviet invasion of Afghanistan and the broader sense of global instability, gold hit what was then a record high, $850 an ounce. Silver didn't just follow, it exploded even harder. That's important, because silver tends to spike when fear overlaps with industrial demand and long-term stress expectations. 1990, Iraq invades Kuwait. When Iraq invaded Kuwait, gold jumped within weeks. Then, when the Gulf War ended and conditions stabilized, gold stopped climbing. Again, gold wasn't predicting the future. It was measuring fear in real time. After 9/11, a decade-long rise. After 9/11, the world entered a new era, the war on terror, massive military spending, and global instability. Gold went on a long climb from around $250 an ounce to nearly $1,900 by 2011. That wasn't just one event, it was prolonged uncertainty. And that's what gold loves most, long uncertainty. 2020, the pandemic shock. When COVID shut down the world, gold hit new highs. People weren't just afraid of illness, they were afraid of economic shutdown governments, printing money instability, supply chain collapse, social unrest. Gold absorbed the fear, like it always does. Here's the reason gold is different. Gold is neutral. It belongs to no government. It cannot be printed. It cannot be created by a central bank. It cannot be deleted by sanctions. In a world where governments can freeze accounts, weaponize banking, and inflate away purchasing power, gold represents one thing, an asset outside the system. So, when trust in institutions declines, trust in gold rises. That's not ideology. That's centuries of human behavior. Silver is not just a safe haven. Silver is also a workhorse metal. It's used in electric vehicles, solar panels, electronics, defense technology, industrial manufacturing. So, when silver rises alongside gold, it can signal two things at once. Fear is rising. Demand expectations. For strategic industry are increasing, that combination is powerful. Gold rising alone can mean panic. Gold and silver rising together at record levels can mean this isn't short-term fear. This may be longer-term global stress. That's why experienced investors take this seriously. Silver doesn't spike this hard unless the world is shifting. If you live in the US, this isn't an abstract global story. This hits your life in a few direct ways. 1. The dollar's perception matters. If markets believe US institutions are politically unstable, the dollar gets weaker over time. Dollar weakness can push inflation upward again, especially for imported goods. 2. Rate cuts could reshape the economy. Rate cuts sound good, but they can also signal economic weakness. When rate cuts arrive, it usually means something is breaking under the surface. 3. War risk hits energy prices. Iran escalation can push oil higher, which filters into gas prices, shipping costs, and inflation. 4. Retirement portfolios feel the shock. When people rush into safe assets, stock volatility rises, and that's felt in 401ks, ETFs, and index funds. So this gold-silver signal matters, not because you're buying metals, but because these are the warning lights on the dashboard. When gold and silver hit record highs, it's not just financial trivia. It's not just metal investors got rich. It's a sign the global system is trembling. Gold doesn't rise because everything is fine. It rises because too many people are thinking, what if this gets worse? What if trust breaks? What if instability spreads? What if the rules change? Gold and silver don't predict war. They measure fear. And right now, the fear is real. The world is bracing.